Hello and welcome to Dukascopy TV. It's the beginning of another trading week, and that means it's time to look at the week ahead. Well, joining me on the line to run through some of the things the markets will be watching over the next 5 days is Eimear Daly from the foreign exchange company Monex Europe in London. Eimear, thanks for joining me today. Let's first take a look at the beginning of the week. We've got UK inflation data on its way on Tuesday and US retail figures. Are you expecting any kind of reaction from the Bank of England if inflation falls?
I think the key thing is this is really justification for the Bank of England. I mean, they took years of criticism over having above target inflation, and for the moment, it really reinforces their forward guidance policy. I think what's really surprising is how fast though inflation is falling. And that's also surprised the banks, which you've seen their downgrades of the forecast for CPI going forward. I think really the Bank of England might use inflation as a bit of a scapegoat. They know that the UK recovery really depends on ultra-low interest rates. And the more unemployment begins to fall down, the more the markets are thinking about hiking interest rates, and money market rates are really squeezing tighter. So I think we might see the Bank of England really using the CPI print as kind of a scapegoat, so that there's more disinflation risk in the UK and kind of delaying out the timeline for hikes in interest rates.
Okay, just moving on to the US retail data the same day. What are you expecting from these figures, and will they be better than the dreadful non-farms we saw on Friday?
Yeah, I think the thing to remember with non-farms is that we actually saw 5 years of revisions in that data, and also it is an extremely volatile series. We've seen really strong growth coming through from the US. And definitely retail sales especially has really rebounded in the fourth quarter from a dip in the third quarter, and we are definitely seeing that continuing. The most sustainable thing about this US recovery in domestic demand is that it's completely broad-based. You know, we've seen increased retail sales across all sectors, and there is a fundamental reason causing that, and there's a rise in real wages. That's because inflation is now easing lower in the US, and price gains are increasing. So we do definitely expect a stronger figure out of the US, but it is important to note that car sales have been lower on the month, so they might dip back slowly to about 0.2% on the month.
Right, there's not a huge amount of market moving news as we reach the middle of the week, but we do have that important Australian unemployment data on Thursday at midnight 30 GMT. If I'm trading the Aussie dollar, what am I likely to expect from these figures?
I think these figures are really key in determining the outlook for monetary policy in Australia. So I think a lot of market focus will be attached to them, and also obviously evaluation of the Aussie dollar. I think if we see another rise in the unemployment rate, we're going to see the Aussie dollar shoot off. If we see a negative headline figure, I think they're definitely key for the long-term bias of Aussie dollar. But I think we can definitely expect that to be lower going forward.
On the same day, we've got both Eurozone and US inflation data. Is the euro at risk of turning lower if CPI data in Europe comes in soft?
You know, we are definitely seeing a downtrend in Eurozone CPI, and is expected to come out lower. The real question is, you know, does the ECB actually have the power to act? We were really surprised last week when we saw the ECB, you know, trying to strengthen their forward guidance by saying they strongly reiterate. You have to question, you know, whether the ECB has just run out of monetary policy tools. You know, if it really has the guts to take on something like QE, like negative deposit rates. I think inflation will continue to fall, but I don't think the ECB will be that ready to act. So yes, a lower inflation print will definitely mean a lower euro, but I think we could see the actual loss in the euro being reversed pretty quickly because the ECB are doing anything about it.
And what's your analysis of inflation rates in the US briefly, Eimear?
Inflation rates in the US are definitely at a higher level than in the Eurozone, so I think the risk of deflation is far less in the US than in the EU. But I do think we'll see that continuing trend of lower commodity prices, which is easing inflation lower. And definitely supporting the recovery and supporting domestic demand in the US. I don't think the disinflation concern in the US is really going to stop the tapering and the scaling back of monetary easing anytime soon.
Finally, what will you be looking out for as we approach the weekend?
I think definitely UK data, especially UK retail sales and the UK CPI, is going to be really important. We've seen disappointing prints last week, and we also saw a big correction lower in sterling this morning. I think the market is reassessing its outlook of the UK economy. I think they're starting to see the holes coming through, that maybe this massive UK recovery isn't as strong as we first thought it was.
Okay, thanks for joining me for the week ahead. We hope that's helped you plan your week a little. And if you want to find out more on the latest data, calendar dates or interviews, just head to our homepage at dukascopytv.com. Join me tomorrow for a look at the latest US retail figures. But for now, goodbye.